everybody, Colter Brown here from the Northern Ag Network with this month's update on our livestock markets. Well, it's safe to say that optimism has returned to the cattle business. The end of 2023 got pretty bearish as prices really tumbled in the fourth quarter, but 2024 has started off strong with prices higher almost across the board, and given the supply situation in the cattle business, it looks like the tops in this market could still be ahead of us. Today we're going to look at the USDA Cattle Inventory Report. That'll be our top story as we examine how much the cow herd has shrunk in the last year. And of course we'll also discuss the futures, fed cattle, feeder and bred cow market, and even wrap up with the lambs. First though, a thank you to our sponsor, Ag Risk Advisors. As you have questions about price and drought risk management, reach out to Ag Risk Advisors. Especially important to be thinking about LRP this time of year. The calf market usually hits its highs in the spring, and while prices are likely to be much stronger this year, those prices may slide into the fourth quarter again, so we want to be able to lock those prices in and leave the top side open. So you can find out more at lrpadvisors.com. And before we get into this month's market report, I want to have a quick message from the Wyoming Beef Council.
I raise beef here in very isolated Wyoming because at 7,500 feet, my cattle are the best way to take care of the land, the environment, and create wildlife habitat. Plus, this isn't land that would be suitable for growing any other type of food, but my cattle allow me to raise safe, wholesome, healthy, and nutritious, high-quality protein to feed not only people here at home, but people abroad as well.
Well, I don't want to bury the lead in today's report, so let's get right to it. The USDA Cattle Inventory Report always comes out at the end of January and always gives us a lot of information to dig into, both at a national level in the cattle industry, but also a lot of state-specific information. Now, this report was largely expected to show tightening supplies in the cattle industry. The average estimate was for beef cow numbers to be down 600,000 head from last year, setting a new 50-plus year low in beef cow numbers. Well, when we got that report, it actually revealed numbers tighter than we expected them to be. Beef cow inventory in the U.S. down 700,000 head from a year ago. And yes, that is as low as we have on record here, going back to the early 70s. Total cattle inventory was 2% below last year at 88.8 million head. Those beef cow numbers, like I mentioned, down 2.5%. You can see some of the beef cow numbers for our western states, most of them showing some drops. We're seeing some slight increases in areas that had better precipitation in 2023, but the trend is very clear, and there's no question that these are the tightest beef cow numbers we've had as an industry. In some states, like Montana, the lowest numbers we have on record when it comes to beef cow numbers. So that really points a pretty favorable outlook from a price perspective when you consider the supply situation with how tight these cow numbers are getting, and couple that with what we're seeing in replacement heifer numbers. Replacement heifer inventory down 1% from last year, so the rate at which those numbers are shrinking has lessened, but still those numbers are lower. We don't have the heifers in the system to rebuild this herd dramatically, so what that means is we have to start retaining heifers, which really only pulls heifers out of feeder production and only going to reduce beef production even further. That spells higher prices for a lot of the industry. So a lot of optimism here. To me, the big question is this the bottom? Have we reached the cyclical low of beef cow numbers? I would guess that yes, this is probably our low point, but really it's all going to come down to the weather. Of course, drought is going to play a big factor in that. You can look back to where we were at this time last year, and actually quite a bit of improvement, really. Not near as much red as we saw this time a year ago. So some improvement in drought conditions, but areas in the northern plains, Midwest, and a lot of the South still experiencing drought. The drought outlook from NOAA shows drought persistence through much of the winter and into the spring here. Now the winter has kind of been a double-edged sword here. Drier than we'd like to see, but warm open conditions have allowed guys to feed less hay this year, so not spending as much money. For those selling hay, it's not exactly a great situation. And for the early calvers, wow, what a turnaround. In some places like northern Montana, we're talking temperatures that warmed up 100 degrees in the course of about 2.5 weeks. So a lot easier weather to calve in, but we're really counting on the moisture to turn up this spring to keep this system going, and we're gonna need that moisture. You know, as we look at the longer term forecast, there's some speculation that we could shift very quickly into La Nina conditions again, which will bring drought back into the conversation. So there is a little bit of concern there. Now, as we move to talk about our cattle futures, I mentioned right at the open that we saw some pretty bearish signals in the fourth quarter of 2023, but boy, 24 started off very strong. Those feeder futures fell about $50 from September highs to December lows. Now we've gained back about $15 so far this year in the feeder futures. And boy, you look out to what the deferreds are doing, marching higher through pretty much the rest of the year. At least that's what the futures think is going to happen. A $30 increase from the spot March contract out to October futures, feeder futures, excuse me. So that's over $200 ahead that this market thinks we're going to see an increase. Now, live cattle didn't see as aggressive increase as the feeders did in January, but then again, live cattle didn't fall down as hard as the feeders did in 2023. Still though, we're talking higher prices, about an $8 gain for most of these live cattle contracts, and as we march through the year, you can see they're forecast to move higher. One of the things that we're really watching right now are the cash projections for feed yards that's saying they're losing money on the cattle being processed right now. Now, if there's price protection in there, they're probably doing okay, but the cattle being placed on feed right now can pretty well be locked in with a profit at this point. That's because the price of corn has cheapened up so dramatically. In the last year, we've gone from $6 corn to $4.50 on the spot contract, so that has really turned things around. Now, in the cash-fed cattle trade, we're seeing that rally continue that started in mid to late December. Really, those cash prices backed off pretty hard from where they were in the fall, but prices slowly churning higher. The bitter cold temperatures that we saw in mid-January did kind of disrupt this market, as feed yards weren't concerned about marketing cattle. Rather, they were just trying to keep them alive and keep them fed through the bitter cold. So that did kind of spike box beef prices, helped the cash cattle, and even really bumped up the cow market, as packers just needed cattle in that time frame. So since then, we've seen the cash values increasing, and you know, if you compare back to this time a year ago, live cattle were selling for $1.55. Now they're up to $1.75, so definitely trending in the right direction. The real exciting factor here, though, is the feeder market. That might be the most fun thing we get to talk about today. The feeder market started 2024 off very strong, started with Northern Livestock Video's sale, and boy, prices higher across the board, especially for those later delivered feeders. They did extremely well, and really replacement heifer buyers competing with feeder buyers in a lot of cases here. So starting off with a bang, as we looked at that Torrington sale, that was just a barn burner. Some of those light 3-weight and up even the light 4-weight steers sold for above $4 a pound. Light 5-weight steers are up to $3.55. 6-weights topped out at $3. It just feels wild to say that the highs in this market could still be ahead of us, but frankly, that's where we are. When you factor in that cattle on feed report that's telling us we're going to have a smaller calf crop here in 2024, and if we actually do start retaining heifers and focus on expansion, that's going to further reduce the number of feeder cattle available to go into feedlots or stocker operations. So really, that's pretty favorable for a cow-calf producer that's going to have what everybody wants, feeder cattle. So it looks like it could be a good year. One thing I do want to touch on really quickly is the cattle on feed report. Came out pretty well where it was predicted to. We saw inventory above year-ago levels, which also feels kind of crazy to say. We've seen beef cow numbers declining for 5 straight years. 3.5 million less cows in the herd, but somehow these fed cattle inventories are staying above year-ago levels. That's because we've been pulling a lot of cattle forward, due in part to the drought, a lot of heifers in the feeder mix that weren't there a few years ago, and a lot of Mexican cattle being placed on feed as well. So that's kind of propped these numbers up. We're expecting 2023 to show placements and expecting 24 to show placements and inventory below 2023's levels. One of the other exciting aspects to watch in 24 is the bred cow market. You can see some of the recent sales there, and prices 30 to 40% above year-ago levels. Really across the board, we're seeing substantial increases. You know, some of these bred heifers averaging over $2,500, and even the short-term and the running age cows here seeing a lot of demand. Actually, it's a bit surprising to say, but a year ago, the bred heifers averaged $1,730. This year, short-term cows at that sale in Dickinson averaged $1,729. So a lot of demand here. The slaughter cow market moving higher as well, about $30 a hundredweight above where we were this time a year ago. There's a lot of demand for lean trim, of course, and a lot less cows available to the market given how hard we've culled these past few years. So expecting those cull cow values to stay strong. Production sales season has started for 2024 as well, and prices pretty well higher across the board. Generally, I'd say 5 to 12% above last year's sales. Depends on the sale. We saw Churchill cattle there at Manhattan about 25% above last year with a top lot at $130,000, but definitely these prices trending higher. And wrapping up with the lamb market, prices 60 to 70% above where they were a year ago. Lamb supplies have tightened considerably and the demand is holding in there, so we're talking some pretty favorable prices where a year ago you had your 80 and 90 pound lambs in the $1.35 to $1.45 range. Now they're worth about $1 a pound more, so pretty favorable in the lamb business as well. Thanks so much for joining us this month. There's a lot of optimism for this livestock market, and it looks like 2024 is going to be a good year to be in the livestock business. Take care.